You're not broke because you don't make enough, you're broke because your dollars don't answer to anyone. Let me show you the one rule that changed everything for me, and could change everything for you. Welcome to Early Access Finance. We teach you how to unlock wealth before the market even opens. Today's rule is the foundation. Never spend a dollar you can't defend. If your money doesn't have a reason, it's working against you. Most people don't know where half their money goes each month. $20 here, $60 there, a forgotten subscription, another $12 sandwich. It adds up and disappears. The problem isn't income, it's awareness. If your spending can't pass cross-examination, your bank account is a crime scene. Before you spend, ask, can I defend this? Rent, gas, groceries, that's survival. New Jordans, third streaming app, Uber Eats 3 times a week, that's lifestyle inflation, that's drift. And drift kills your financial future. Let's break this down. Say you make $4,000 a month, rent is $1,200, car note is $400, groceries, $300, all valid, all defendable. But then $800 go missing to Amazon treats late-night cravings and mystery charges. That's $800 that could have been traded, invested, grown. Instead, it's gone, untraceable, undefended. Here's what I want you to do. Pull up your last bank statement. For every charge, ask, can I defend this? If not, subtract it. That's your seed capital, that's your startup fund, that's your future portfolio. Start treating your money like soldiers. You don't send them to war without a mission. To help you start, I created a quick worksheet, the Gary's Rule number 1 Audit. It'll help you separate what serves you from what's been silently stealing from you. Grab it in the description. It takes 10 minutes, and it could unlock your first $1,000 to invest. Wealth doesn't come from earning more, it comes from losing less to things that don't move you forward. Never spend a dollar you can't defend, and if you do, be prepared to explain it to your future self. Next up, I'll show you how to trade before the market even opens, and why 4 a.m. might be the most powerful hour of your financial life. Hit subscribe. This is just the beginning. While everyone's asleep, I'm already trading, and WeBull is the only app that lets you do that at 4 a.m. Most people miss the biggest moves in the stock market because they wake up too late. But real traders, we catch the wave before the market opens. Here's how. Pre-market is the secret window from 4 a.m. to 9:30 a.m., before the official bell. This is when earnings drop, news breaks, and volume spikes on select stocks. Big banks and insiders already play in this sandbox. The question is, why aren't you? Most trading apps like Fidelity or Think or Swim won't let you trade until 7 or 9 a.m. But WeBull opens the gates at 4 a.m. Eastern, giving you a full 5-hour advantage to enter or exit early. That edge could mean the difference between catching a spike or missing it entirely. Last week I caught a biotech stock that jumped 50% pre-market after an FDA approval. By 9:30, it had already cooled off. With WeBull, I was in at 4:05 and out by 6:30. Clean profit, no fear of missing out. Now don't get me wrong, pre-market is volatile, spreads are wider, volume is lower, but if you play it smart, with tight targets and clear exits, you can turn this window into pure opportunity. Want to test it out? Sign up for WeBull today, and get 2 free stocks when you deposit as little as $5. Links in the description. Welcome to the 4 a.m. club.
Want to make fast money in the stock market? Scalping might be for you. It's all about speed. Buy low, sell high, and do it all in minutes, sometimes seconds. Scalpers live for the thrill of volatility. They crave those rapid-fire trades. Profits can add up quickly, but so can losses. That's scalping. Think of it like this. You're at a blackjack table in Vegas. Scalpers are the ones playing multiple hands, betting big, and in and out before you even realize what happened. High risk, high reward. That's the life of a scalper. Who wakes up at 4 a.m.? Scalpers do. Why? Information. Pre-market is where the magic happens. News breaks overnight. Companies release earnings. The market reacts before the opening bell. At 4 a.m., the playing field is level. Everyone has the same information. No algorithms, no institutional investors, just you and your gut. It's the Wild West, but with better coffee. Ready to join the 4 a.m. club? You'll need the right tools. A brokerage account with pre-market trading is essential. Think of it as your weapon of choice. Next, you need a direct access trading platform. Speed is key in scalping. This is your race car. Don't forget about charting software. You need to see the trends, moving averages, volume indicators. These are your friends. Finally, news feeds. Information is power. Know what's moving the market before anyone else. Section 4. Anatomy of a scalp. Riding the FDA approval wave. Let's say a biotech company, let's call it Cure Corp, is waiting on FDA approval for a new drug. The news drops at 4:30 a.m. Approval granted. Cure Corp stock is soaring pre-market. This is your time to strike. You buy 1,000 shares at $10. Minutes later, the stock hits $10.20. Boom. You sell. That's a $200 profit before most people finish their morning coffee. Rinse and repeat. That's the scalper's life. Section 5, discipline. Your shield and sword in the pre-market arena. Scalping is not for the faint of heart. It's a high-pressure game. Emotions can make you lose big. Greed is your enemy. Set realistic profit targets. Don't get greedy. Remember, losses are part of the game. That's why you use stop-loss orders. They automatically sell your stock at a certain price, limiting your losses. It's like an insurance policy for your trades. Discipline and risk management will keep you in the game.
Just because a stock is up 100% doesn't mean you should touch it. Volume tells the truth. Here's why. If you've ever bought into a stock that spiked, only to watch it dump as soon as you got in, you probably ignored one thing. Volume. Volume is how many shares are being traded. High volume means momentum, low volume means traps. Without volume, you're not trading, you're gambling. Some stocks spike 50% or more with barely any volume. That's not a real move, that's manipulation. If you try to scalp a low volume play, you'll get stuck, or dumped on. Always look at the volume bar on your chart. Check if today's volume is higher than the average. If it's not, skip it. I also use free tools like WeBull or investing.com to filter out junk. My personal rule? I don't trade anything with less than 1 million shares traded by 6 a.m. If it's not moving, it's not worth the risk. Want my full pre-market checklist? Download the Volume Filter Blueprint. Links in the description. Start trading smarter. Stop thinking in dollars, start thinking in percentages. Why? Because percentages remove emotions and help you trade smarter. Here's the truth. Making $100 profit sounds good, but if it's only a 2% return, was the risk worth it? Focus on percentage gains, not just dollar amounts. Let me show you my simple 10% rule. Each trade, I target a clean 10% gain. Whether it's a $100 trade or a $5,000 trade, the math stays the same. A 10% return means you only need 10 winning trades to double your money. Let's break it down. With $100, a 10% gain is just $10. Small? Sure, but stack that consistently. With $5,000, the same 10% is now $500 per trade. Same percentage, bigger profit. Thinking in percent means you can scale your strategy without emotions. You stop chasing risky trades, you become disciplined, you become profitable. Ready to track your trades the smart way? Download my free 10% Rule Profit Tracker, link in the description. Start stacking percentages, not emotions.